Welcome to Chapter 10, and we are going to look at banking, transferring funds, credit cards, bank reconciliations, and all that fun stuff. And so we will. So this chapter entertains the idea that companies may have multiple bank accounts for multiple purposes. You get your regular checking account that is your operating account, payroll checking account. You may have also special accounts if you have sales tax withholding. I strongly recommend, sales tax, rooms and meals, all of those types of things put in separate bank accounts so that there's no temptation to inadvertently spend that money when the need arises. And so the things that we're going to be doing in QuickBooks are things that we I think used to do manually, and the longer that I spend teaching this and the older I get, the fewer people I find that actually reconcile their bank accounts on a monthly basis. More and more people are relying on online banking, and when I ask somebody what the balance is in a client's account, few people now take out their check register and tell me what is in the check register. They're more likely to hit a button on the phone and say, oh yeah, $27. And then when I say, well, but how many checks are outstanding? They just kind of look at me. So the account reconciliation process is what you are supposed to do and is good accounting practice, but more and more a foreign concept for people who are in the digital age. And we will also talk about transferring money. So when our bank statement comes, the bank will show what the bank believes what the bank knows it has in the accounts for us and any transactions that have occurred during the month. Now, oftentimes there are transactions that have occurred that haven't hit the bank yet. We may have written checks and they may have been, stuffed under the seat in somebody's car instead of cashing their paycheck, or, maybe we took a deposit really late over to the bank on the last day of the statement period and it didn't record until the next day. And so there are all kinds of reasons why what shows in our bank account records in our QuickBooks may not match what the bank statement is. So when the bank statement comes, it's time to reconcile those. And this is where we find any mistakes, any discrepancies, and we fix those before they compound one another and end it in an overdraft. Hopefully you all remember the manual system of doing this from Accounting 1. And so I will go through shortly and show you how to do that using QuickBooks. And then credit card charges, we don't have a particularly great manual comparison for that because much of that is electronic, whether or not you're using QuickBooks. And so we may or may not have to update chart of accounts. So we'll talk first about transferring funds between accounts. And how you do this will depend on whether or not you are manually writing a check from one account to the other. I tend to have accounts at different banks for different purposes. And so, for example, my client trust account is at a different bank than my other accounts, so that there is no chance that I could inadvertently have a deposit that was supposed to go into my trust account placed, in fact, in my operating account, or vice versa, because the client trust account is not my money. It is client trust funds that I'm holding, and that has to be guarded in a fairly sacred way. And so, but there are times where I do actually have to manually move money from my client trust account out of it into my operating account. And so I will just physically write a check to do that. However, there are other accounts which are at the same bank, and I don't need to go in and manually write a check because I can go online and I can just move the money. And so those are kind of the different situations where you would write a check versus use the transfer funds window. And so I'm going to scroll sort of briefly through this process, and then I'm going to go over to the live version. So in our live version, under the banking window, we go down to transfer funds, and it looks kind of like a check, but there's not going to be a paper trail to go with this as if we were doing a manual check. This is where we're going to be doing either an online transfer or a telephone transfer or something in that way. The most important thing here is that we make sure that we get the from and to accounts correct, and that we don't reverse those, because that will wreak havoc with our accounting system. And then just a little memo to talk about why we did it, and we can either save and close or save and new. And so now when the bank statement has shown up in the mail and it's time to reconcile the bank's records with our QuickBooks records, we don't have to go through that cumbersome process that we went through in Accounting 1 and do it manually instead. And if you actually flip over the back of bank statements, they still have a little form on the back for people who want to manually reconcile their bank statements. It's pretty funny. But if you go to, and I will just go through this quickly because there will be some additional things that we may have to enter that if the bank charge us some service charges, if we were lucky enough to have any interest income, or if there was a check that a customer may have bounced to us, we're going to need to record those, because we would have really, unless we got a notice in the mail separately, not have any other way of knowing that we have to make that adjustment in our books. And so QuickBooks has, these are not transactions that you'll have to enter, but this is the net effect of what those entries will be when you enter a bank service charge. It will go into a debit of bank charge, service charge expense, and it will credit the cash. When there's interest, our cash is debited, interest income is credited. Now, if there is an NSF, which is short for non-sufficient funds, in other words, somebody bounced a check, QuickBooks isn't going to know that. So we need to record a transaction in the create invoices, and that will establish an obligation for the client. And also a way for us to track it. And then the credit will be from a revenue account. And you also need to create an item in your list menu for non-sufficient funds. And the kind of default, or the kind of account for that, should be cash. And so the accounts receivable gets debited for the amount of the NSF check, and the corresponding credit is to the NSF item. QuickBooks also lets you go back and undo a previous reconciliation if you find that there were mistakes. And again, I'm going to go through all this on the live version again, but so we'll just skim through these. But when you start the reconciliation, it will open up with this window. You're going to want to have your bank statement handy. The statement date, it will kind of guess based on your last statement date when it thinks your current statement closed, but sometimes due to weekends, holidays, whatever, your statement's not going to end on exactly the same day every month. So you'll want to go in and fix that. It will show the beginning balance, which was the ending reconciled balance from last month, and then you have to manually, forgetting that's not a live field, you'll have to manually enter the ending balance. It should just come right off your statement. You've got a service charge here, and once you have selected the account for your service charge, that will generally show up month after month as associated with that kind of transaction unless you change it, and as well as the interest earned. And these may or may not be on the same day as your statement date, and so you'll want to go through and just double check the date that the interest was earned and there was a service charge, so that those are reflected correctly. And then what you will have is a screen here with all of your checks and withdrawals down the left and all of your deposits down the right. And you're going to take your bank statement and you are going to compare the checks on your bank statement with the checks that are here. And one thing that I always do, because it can get really cluttered up if there's been a lot of activity, and especially if it's been 4 or 5 days since the statement period ended and I have lots of transactions since then, I like to click this hide transactions after the statement end date, because those aren't going to impact my reconciliation at all, and it's just nice to get them out of the way. So that will only just do this temporarily, just to kind of clean up my screen a little bit. And so, when you find a check on your bank statement, you check this little box here and you go on down the line. Same thing with the deposits and other credits side. As long as it appears on your statement and it is in the correct amount and all of those things, and you want to confirm that the payee is the same, then you check it off here. And so the goal is that when your bank statement and all of these items are checked off correctly, you should get a difference of 0 at the bottom here. And so that should that's how you know that you have reconciled and balanced your bank statement, is that the difference here between what the bank statement says and what QuickBooks says is 0, because we've now accounted for any differences. So there are no other differences. If you've got a number here, you've forgotten to enter a transaction, you've transposed a number, you got a little overly enthusiastic with your checking here and you inadvertently checked a box you shouldn't have. I've certainly done that. And so one of the ways that I do that is my bank on the bank statement, it tells me how many deposits I've had for the month and how many checks or payments. So I look at that number that's being tallied down here and I look at it on my bank statement. And if it says, 12 deposits on my bank statement and I have 13 things, it says here checked off, then I go, okay, well, maybe the mistake is on the deposit side. But if it says I have 10 deposits and on my statement and this says I have 10, I'm probably going to be okay, especially if the deposit balance matches with what my bank statement says the deposits were for the month. Then I go back to the checks and payments side. And, this can happen when you've got an ATM account or an ATM card that's tied to an account. Stuff just slips by. And if you've got a lot of electronic transactions, there may be a fair amount of data entry involved to be able to effectively reconcile the bank account at the end of the statement period. But once you've reached this difference is 0 and everything is reconciled, you hit reconcile now, and it gives you the opportunity to print 2 different reports. You can either print a summary reconciliation report or a detailed report. And so this happens to come up with the detailed report. And so I will go over and, okay, so here we are in banking. We go down to reconcile. We make sure that we have the correct account chosen here. And again, I don't have any data in here, so nothing's going to appear. But if I had my bank statement handy, I would enter that information here, as well as my service charges. I would make sure that my dates are all correct. And if I needed to undo the last reconciliation, that's where I do it. And let's just now, because I've entered this random transaction and there's error ending balance, nothing in here is going to match. But if I note that this particular opening balance happens to come after my statement date, so I can just show you here how I click that and that disappears. So it's just a nice way to sort of clean things up. But my difference is going to be $4 because of that silly empty or ending balance that I stuck in there just for kicks. If for some reason, and this has happened too, where I have been left with a difference and my deposits are all accurate, my checks are all accurate, I can't figure out where I have gone wrong. I also come back and make sure that I didn't inadvertently transpose a number when I entered the service charge or the interest or the ending balance. And I have done all three of those at various times incorrectly because I just wasn't as careful as I needed to be. But this is where that mistake will start to show itself. So if I need to go back and fix those, I hit the modify and I can go back and make sure that I have made correct entries here. And it won't actually go ahead and, record these as being like as happening until we've done the reconcile now. So I can go in and I can modify these during the reconciliation process and it's not going to hurt anything. And I won't reconcile now because I don't want to mess up my company file. But it would then prompt me to determine whether or not I was going to do a summary report or a detailed report. And I'm going to actually go on to the next video to discuss credit card transactions.